All right, it's the 27th of Jan. It's a Monday. We've got about just under 30 minutes to the NY Open. We're going to get to the charts in a second. Yeah, sound good? I think it is. Yep, I think we're good. Just a second. All right. Hmm. Okay, let's look at the calendar before we start. So this week we've got no news today. Tomorrow there is consumer confidence, not important. Wednesday there is nothing. Actually, Wednesday is FOMC rates. According to my time zone, it's on Thursday, but Wednesday is the FOMC is the federal funds rate, and the FOMC statement, the press conference 30 minutes after that. Okay, so that's the big one for the week. That's on Wednesday, right? And why? If you're trading, um, if you're trading, if your time zone is Eastern Standard Time, then that's on Wednesday. And then on Thursday, again, there is nothing important on Thursday. Unemployment claims on Thursday, and then on Friday is price index. These are all not important. None of these are important except for the the federal funds rate, and the press conference that happens 30 minutes after that, right? Those are the only two important news events for the week. We're coming to the end of the month, last week of the month, so just be very mindful, be careful when you're taking trades. Also have also I suggest having conservative TP levels instead of having runners. You can have runners, but try to take most of your positions off at maybe 2 RR. Okay. All right. On the daily, what's happened? Let's go up a time frame and look at the weekly very quickly. So we've closed strong bullish. We've closed above 2750, above this resistance, weekly resistance right here. We've closed above it. So that turns now weekly resistance becomes weekly support to set 2750. The daily candle has already dipped into this. We'll take a look at the daily time frame very soon, but the weekly candle has closed above it, signaling that we're heading higher, right? Now the next point is 2787. Did this reach there? No, it didn't reach there yet, but the next area is 2787, so that is about 260 pips away, and then above 2787 is 2800. Now we are at all-time highs. I really don't like trading when prices at all-time highs, because there is no structure, there is no price, there is no price action to the left. Okay, on the daily time frame we have a little more information than the weekly. Obviously we have tapped into this daily supply. There was a supply zone here, a rally, a base, a single base in candle, and a drop. This drop was a significant drop of over 2,500 pips. Price dropped, but price has come there. We're very bullish. It's not been able to push price down again. We've just pushed price down just about 300 pips, and yeah, we pushed price down about 320, 330, 340 pips, and that's it, right? We're getting a bounce back of 2750 to push up, right? We're very bullish right now, and unfortunately now there is no there's no price action to the left. There's nothing to the left. Okay, we're at all-time highs again, right? So now I would personally would like to see some sort of daily structure form to be able to take a trade, or 4-hour daily or 4-hour structure form. Let's go down to the 4-hour very quickly, because the 4 hours will give us a little bit more information. So we have some sort of structure here, but barely anything. We have a rally, a base, and a drop, but that drop hasn't taken out any lows here, so we don't have any confirmation that price could go down. We're still very bullish, right? We've created support again. We have 4-hour support. We've also created a demand level, 4-hour demand level, and 4-hour support just above 2750, signaling that we're heading higher, right? So your high time frame bias is bullish, right? Don't try to sell unless there is a bit of there's quite a bit of confirmation, right? But don't try to sell. We're in a very bullish market. The issue is there is nothing to the left here to know where price could head. We just have these two key levels, 2787 and 2800. Apart from that, there is no price action to the left. Okay, that's the issue when you're trading at all-time highs. Let's go to our trading chart. Let's just look at Friday. I wasn't here on Friday. I didn't trade, nor did I stream on Friday. But just take a quick look at what happened on Friday. Let's go to the 4-hour time frame. Yeah. So let's get rid of this. This was not a zone that, okay. So this was the zone that we had drawn on Thursday, right? We had drawn this zone uh, based on the 4-hour. You can watch the first 30 minutes um, of Thursday's stream, or the last 15 minutes of Thursday's stream, right? Either of it doesn't matter. So that's a 4-hour zone that we had drawn, right? A rally, some base-in candles, 1, 2, 3, 4, 5, 6, 7, 8 base-in candles, and a drop, right? And inside that, that was about a 120 pip zone. Inside that, we identified a liquidity candle. So let's just go take a look at that liquidity candle very quickly. I think it was on the 30-minute, was it? Yeah, on the 30-minute, right? So that was the largest candle in that zone, that candle right there. So that's the liquidity candle for that zone. So I said, if you're looking for sells, wait for M30 resistance to form, because you're taking a counter trend trade. Wait for M30 resistance to be formed. After price touches this area, safer stop loss is above the liquidity candle high, so just above that high, which is that high is 2779.68. So you could have put your stop above 2779.7, just a couple of pips above that, and that's the area to take a sell. Now, what happened? Let's look on Friday. What happened? Let's extend this to the right. So today is the 27th. Let's extend it to the 27th. We're going to take a look at Friday, what happened at these levels. Okay. Okay, so that's what happened. Let's go to we are on the 30-minute time frame. Okay. So price came, tapped it in the NY session. This is the NY session. Price came, tapped it, created M30 resistance. Once M30 resistance is created, you wait for the pullback. Would have been this candle, this wick right here. So if you go down to so this candle started at 1630 IC market server time. If you go down to the, one second, if you go down to the 15-minute time frame, that was this candle right here, and that's the pullback, right? So I would have drawn the fib. This is how I would have drawn the fib, right? Because I need to see two recent highs being broken. So this candle broke this side, this candle broke this side. So perfect, two highs are broken. Fib is drawn. Entries here, 2783, 2783, 2783.8. Okay, roughly those are your entries. So one entry there, one entry above that. Stop loss above the liquidity candle. So you would have had so your first entry would have had about a 45 pip stop loss, and the next one would have been about 35 pip stop loss, right? And price drove down beautifully to the next liquidity area, which is 2750. Now, why here? Because of this, right? I come back to this always. These are the areas of liquidity on a price chart that I identify, and this is point number 2 is your psychological round numbers, right? And that's exactly where price came to, because that's the next area of liquidity, right? So that was a fantastic trade, a 330 pip drop from here. From here, even about a 350 pip drop, right? Um, yeah, so that would have been the trade for Friday, but I wasn't here on Friday and I didn't take the trade, but I gave out trade ideas on Thursday. Uh, okay, so let's draw zones, go to the 4-hour time frame. Let's get rid of everything here. Now, uh, personally, I'm really not looking to um, take any trades because I want to see some sort of structure form. Okay, but we are going to take a look at we're going to take a look at all the zones and see if there is any sort of opportunity for the NY session today, right? It's a Monday. Um, I would like to see, honestly, I would like to see this week through. There is FOMC might give direction of where the dollar could head, where the Dixie could head against a basket of all the major currencies, basically. So I would like to see where the US dollar is heading after interest rates. We might get some sort of direction for next week. It would be better to trade next week. I think next week is NFP. Yeah, next week should be NFP. Yeah, next week is NFP. Um, so this would be a far better week to trade than this week, right? So this is the end of the month, the last week of the month. So it's best to take it easy. All right, let's get to work. Okay, so we've tapped into that, right? We've tapped deep into that candle. So I'm gonna get rid of, yeah, let's get rid of that. Yeah, let's get rid of that for now. Okay, so we have a rally, 1, 2, 3, 4, 5 basin candles because these candles all have more collective wick than they have body, and then that's a drop, right? So the price hasn't gone through the zone, so I'm gonna let's draw a new zone for this. Okay. Now remember, this zone here, this supply zone that I've just drawn, is a reaction to the source. It's not an original zone. It's not a source. That's the source. That's the rally. That's the all-time high that price created. When was that created? October. Okay, somewhere end of October. So that's where we created an all-time high. That was new supply that was created here. Price dropped. Now here we've come tapped it, and this supply that's created here is not new supply. It is. Let me rephrase that. This is a reaction to the original supply. This is not the original, this is not the source. This was the source, and this is now a reaction to that source. So prices tapped this zone once already. Okay, so if it does come back, does that zone, this zone right here, does it have enough volume to push price down, or is price going to go right through it? Okay, the lower time frames will tell us what price is going to do. Okay, let's put the numbers on this. This high is 602, close 148. 602. Okay. Now the reason I still have that zone is because price hasn't broken right through it yet. Okay, let's move these labels to the side. Okay, so price has already tapped this zone and we're pushing down again. Now let's do demand. Okay, so we have a drop, a base, and a rally here. That's the first zone right there. And that seems to be a reaction to this. So price has gone through this already. We've gone through this. So we've got this zone right here. This would have been the, yeah, that would have been the original zone. And price has come into it. Okay. So this was the source. Price broke through that, created a new zone here because price came down, broke through this, right? This was the source. Let me explain that clearly. Um, so those who are interested in learning supply demand understand it better. Um, this was the source, a rally, a base, a rally, okay? Price broke through it and pushed back and created a new demand level, right? So now that wick and that's the zone, right? But prices dipped into it, so we need to bring it down here, right? Prices, this would have been the original zone, about there, a drop, 3 basing candles and a rally. Prices come, so the original zone would have been about 170 pips, and we've come about 59 pips. So we still have a bit of liquidity left in that zone. Okay, that's it, right? Let's put the numbers on this. 642. 739 642,739. Okay, yeah. And this one would be low 598. Okay, done. Right? Uh, that's the closest demand H4 demand zone. That's the closest supply zone. Okay, just save this. Okay, let's extend these to the right. Okay, there is, I would consider this as a base-in candle. This rally, base, and then that rally. So 1, 2, 3, 4 base candles. So this zone, yeah, let's just extend this here. That's better. So that I don't draw another zone there because it's just a very bit of that zone left, just about 10 pips. So just extend it to the right to cover that. Otherwise you'll have two zones overlapping each other. So I just want to cover that. The low of that is 471. Perfect. 471. Okay. I hope that's clear. That was the zone. There was one zone here. There was another zone here, a rally, 4 basing candles and a rally. I didn't want to, because the price has come deep into it. Just it stopped 10 pips short of breaking the zone. So instead of drawing a 10 pip zone there, I just extended this to the left and downs to cover that whatever's left of that zone. Yeah, I hope that's clear. Okay, let's extend this to the right as well. That's a high liquidity candle. So that covers about 380 pips, 400 pips downside. That's good enough, okay? And then we have, that's all we have, about 250 pips to the upside. We have now no other information above this zone. We have no information to the left, so there are no zones that we can draw. Okay, next. is what I do is why I identify high liquidity zones. So out of these new demand zones and new supply zone that we drew, which of them are high liquidity zones? A high liquidity zone is basically a zone that's taken out an opposing zone. So let's look at the supply zone to start with, right? Um, this move, has it taken out anything onto the right? Yes, it has. There is this rally, there is a base here, and there is a rally, and price came down and took that out. So that's a high liquidity zone now. Okay, great. The one above, um, price came deep into it. There is just, it was I think 120 pip zone if I remember right. There's just 40 pips left. So price has crossed the 50% mark. So I no longer consider whatever's left on the whatever's left of that zone to be a high liquidity zone anymore because prices crossed the 50% mark. Okay. All right. Let's look at demand. Um, has this taken out anything to the right? Uh, I would mark this as a high liquidity zone purely because there is a BRN running right through it. So I don't want to ignore this. Okay. I don't want to ignore this. I'm going to mark this as a high liquidity zone. It did take out some supply here. This move up took out this supply. There's a supply zone right there, and it took it out. But more important than that is that 2750 runs right through it. So that's more important. Um, here, this is the source. Well, this is the source. This took out all of that supply. So this is also high liquid zone. Sorry, not this here, right? So this demand that price pushed up and took out this supply here, took out this supply. This is also all supply, took out all of that. So making this a high liquidity zone. All right, done. Save this again. Okay. Now, the next thing to do is, what I do is I identify a high liquidity candle. Now, price um, is in between supply and demand right now, so there's nothing to do right here. But in case price comes back up here, I want to look, I want to see where is there a particular area that or a price level that can push price down, right? And I do that by identifying a high liquidity candle. And a high liquidity candle is basically the largest bearish candle in the zone, right? That's all it is. So we'll start with the 1 hour time frame. On the 1 hour, it would be, I think, this candle. It's a 106 pip candle, and this one is that bigger, also 106 pip candle. We'll have to go down to the 30-minute. Still have two candles there. This one is a 103. This one is 106. So it would be this candle. Let's just mark that candle out. Oh, don't have my, 1 second. Okay, let's go down to the 15-minute, take a look at that again. Yeah, I would put that candle up there. That's 70 pips. 69. 69. Oh, it's close. So I'll do the numbers on this. Okay, let's do the numbers on this. 69, 693. It's this candle right here. Yeah, and that's why price is reacting too. Three, 43, 51. Ought to be on the 15-minute. Yeah, that's where price is reacting to right now. Created resistance. Okay, 790097. 790097. Okay. Now, that's a liquidity candle. That zone is 140 pip zone. Yeah, that would be the liquidity candle. Let's take a look at the 1 hour. 69. It's much bigger though. Yeah. Yeah, that would be the candle, not the one above. Okay, so price has reacted to it. Pre-NY session, we've touched the liquidity candle and price has created M30 resistance. This is the start of the pre-NY session right here. IC market survey time 1400 hours, and that candle tapped into it, and the next candle created a bearish candle and is continuing to drop, right? Let's see if we're going to get a pullback to this candle or we're going to continue to drop. If you get a pullback to this candle, you can take a sell with your stop loss above this liquidity candle. That would be the safer stop loss, or stop loss above this candle, but the safer stop loss would be above the liquidity candle, right? If you get a pullback here to this candle, then it's a fairly larger stop loss, but you would have to wait. So what I would do is I would wait for maybe resistance, M15 resistance to be created, or even M30 resistance to be created again to take a sell instead of just trying to take a trade on the pullback. Maybe wait for some sort of confirmation and then take a trade coming down. Those are for sells. Okay, now let's look at here. Let's look at this area. Look for, if price is to stop here and reverse, where could that happen? Is there a liquidity candle in this zone? So that's the largest 1 hour candle that is sticking out of the zone. 102 pip candle. Let's go on 30-minute. Yeah, this one right here, 93 pips, but no bottom wick. Let's go down to the 15, 56, 56 also. 57. It would be this candle right here. 56. 6.5. Yeah, this one right here. 497,931. Let's look at the 5-minute time frame very quickly. Yeah, I would have it at that candle, right? That would be the liquidity candle. Yeah. And so there's a liquidity candle there, plus there is a BRN right there. So if that doesn't hold price and push it back up, then it's going to come to the next zone, which is this zone here. Just quickly save this. Okay, so NY session has just opened. It's been about, yeah, this is the first 15-minute candle of the NY session open. We're going to wait for the candle to close to see what happens with that candle. It might drop into this liquidity candle. It's very possible. This candle has no bottom wick. Just keep that in mind. So we could come below that candle, right? So let's see if price comes below it. Where is it coming to? In this zone, I'm going to look for the largest candle. There is that 68 pips, but there is also a wick here. So we're gonna mark this wick. I'm gonna mark this wick first. Now let's go down to the 30-minute time frame. When you see a wick like that, that's generally a liquidity grab and pushing price up. So there could be more liquid. There may have created liquidity to go up. So when you have a big wick like that, if you look on the 4-hour time frame, there's a very big wick there. That's about a 405 pip wick. On the 1 hours, it's a fairly large wick compared to all the other candles in the area. And on the 30-minute also, there is a fairly large wick. So we're going to take a look at that candle. $69 pips. Should be much smaller. So let's go to the 15-minute time frame. 46, 56. 66. 30-minute. $68.8. 72. Yeah, this one right here. $73 pips. candle right here. 486775. Okay, perfect. So if price doesn't find enough liquidity here at this liquidity candle or at the BRN, it's coming here, right? And that's another 45 pip drop to this liquidity candle. Okay. Let's see what price does. Is it going to come back to this candle and then push down, or is it going to come straight down and then create some sort of candle structure at this liquidity candle here or at the BRN? All right, that's in terms of the analysis. That's basically what I do every day. Let's just save this. Okay. Um, I'm not going to be here on the chart too long for the next few days because um, I'm going to be here to do the analysis. I'll be here every day, do the analysis, draw the zones. So that'll kind of help you. You can use this as education, or you can use these zones on your chart to see how price reacts at these levels. And if they help, you can use them to take trades. But I'm personally not going to probably be trading. I'm just going to be watching because I want this week to end for several different reasons. One is that I think in terms of the dollar strengthening, that's going to happen in Feb or after that, because that's when the tariffs are going to kick in, right? 1st of Feb. That's what he says. That's what Trump says, around the 1st of Feb. So let's see. Let's just wait for that, because right now gold is very strong. It's at all-time highs. There's not much technical structure to trade off from. On the high time frame, on the daily and the 4-hour, there is almost nothing. We have something, we have structure on the 1 hour and the 30 minutes, but that's not enough. You need to have clear structure on the daily and the 4-hour to know what direction price is heading to. And that we don't have here right now. We're just ranging right now. You can see the EMAs are flatlining. They're beginning to go sideways. Prices gone below them, gone back above them. So I would want to see this week through and then have a look at next week. Next week is going to be a far better week to trade because of the NFP volume, and also we should have some sort of direction in terms of the interest rates, where the US dollar planning on heading, and also in terms of other fundamentals like the tariffs and so on, right? So this week, I personally am not going to be looking to trade, but I will be here to do the analysis and draw these zones. Um, yeah, okay. Yeah, so these sessions are going to be very this week, most probably the sessions are going to be very short sessions of like 40 minutes, 45 minute streams where I just draw the zones, and then kind of I just can watch price, what it does, what price does at these zones. Is it gonna um, react here? We're going to see. So if you want to take sells, what I would suggest is wait for M30 resistance to be created. Wait for a little bit of confirmation instead of taking, because price is ranging right now, right? We're neither trending down nor are we trending up on this time frame. On the high time frame, obviously, on the dailies, we're pushing up. On the daily and the weekly, we're pushing up. But right here, if you look at the 4-hour time frame, where we're going sideways. We have this candle, then this candle close back in, this again close back in, this one trying to close back below again. We're going sideways. So, and on the 1 hour, you can see we're still ranging. So basically, wait for a bit of a high time frame confirmation in terms of session trading, a high time frame confirmation. So like an M30 resistance to form to take sells, or M30 support to form around either the liquidity candle or the BRN or the liquidity candle below. Wait for M30 support to form to take a trade going up. And similarly, wait for M30 resistance to form at the liquidity candle that we've identified here, or just above it. Wait for M30 resistance to form to take a trade going down. Don't just buy or sell soon as don't just sell soon as price gets here, and don't just buy soon as price gets here. Just wait for that additional M30 confirmation, support or resistance to form to take that trade going in the direction, right? So you want to see M30 support form to take a buy trade, and you want to see M30 resistance form to take a sell trade. Exactly like what happened here. Wait for M30 resistance to form. This was on the M30 time frame. We had this candle form resistance, then take the pullback, right, with stop loss above that liquidity candle like I showed at the beginning, and that would have been a very comfortable trade to take, right? Um, Always remember the safest stop loss is above the liquidity candle, right? Want to be more aggressive, you can place it above the M30 high or the M30 low that created support or resistance, but the safest stop loss is always above or below the liquidity candle. All right. Okay, I'll be back in a few minutes. coming down. We're coming down. You want to wait for M30 support to form after a touch of this candle. Don't don't do anything. You can't sell now because demand is just less than 20 pips away. Um, so you want to buy, wait for M30 support to form. Don't buy until then. Yeah. So as I said, um, you want to buy, wait for M30 support to form, either the liquidity candle or after a touch of 2750 or the liquidity candle below. Wait for M30 support to form and then buy. Once M30 support forms, you can just wait for a pullback, right? Wait for a pullback or enter however you way that you feel comfortable entering the trade, but wait for that M30 support to form and then look to buy. And then if you buy here, your stop loss should be under the liquidity candle, right? Under this candle right here. Yeah, under the low of this candle. Okay, and if you buy inside here, again, your stop loss should be under the liquidity candle for price to move up. Be be conservative with your TPs. Don't try to have runners. Price is ranging. It is slow. It's a Monday. Uh, I think the market's also waiting for some sort of direction to come in on Wednesday with the interest rates. So until then, be very conservative with your stop loss levels. Maybe Thursday and Friday there might be more volume. But for today, tomorrow, and for Wednesday, be very conservative because Wednesday, in the latter half, the second half of the NY session is the interest rate decision. It's not in the first half. So Monday, Tuesday, Wednesday might be slow. Um, yeah, on the daily, on the high time frame, as I said, on the weekly and the daily, we are pushing up. But on the lower time frames, on the 1 hour, on the 4 hour and below, we are going sideways, right? Uh, so we might come back here, create some sort of support, M30 support, and push all the way back up. Come back here, create M30 resistance somewhere here or just above, and push all the way back down. Okay, so just be patient for it. Um, yeah. Okay, so I'll be for another 6 7 minutes, and then I'm gonna end the stream. Um, I might put an alert around this area, a price alert around here, 2755, and also a price alert around 2750, and then here to see if he's 2745 to see if he forms anything, any M30 support to push price up again, right? That's probably what I'm going to do. I'm not going to be at the charts, but I'll be here for another 5 or 6 minutes. Yeah, but I'm looking at Feb, right? I think Jan. There's a lot of things that happened in Jan, so the market is waiting for probably direction, right? After these all-time highs are created, I think we might push higher, and then we might start to see price drop, but that could take some time. I don't think that's going to happen in a few days. That might take maybe a week or maybe a couple of weeks for that to happen, for prices start pushing down again. Because right now, gold prices are very high. The dollar is not doing well at the moment. So for the US dollar to start strengthening, it might take a few weeks. That's when you will start seeing confirmation on the daily time frame and even on the weekly time frame, and start seeing structure form to the downside. And that's when you want to trade. That's when you want to get in on those trades and have those runners, and let those runners run. You might get 300-400 pips off those runners, right, when price begins to come down. Right now, not much price action, nothing actually on the left. We've already tapped this zone, so on the daily time frame there is nothing, absolutely nothing to the left. We've already tapped the zone, right? And we tapped it, and we did get a reaction. Price dropped about 340 pips, I think. Yeah, about 350, 360 pips we've dropped off that daily supply zone. Apart from that, now that zone is already tested, and prices come deep into that zone, right? It's gone very deep into that zone. Price has wicked deep into it, and we pushed back down, and we're rejecting 2750 again to push up. So we might range inside this 360 pip range for the next few days. It might, right? We might range. We might have to wait until Feb to see a breakout, or maybe FOMC to see a breakout out of this. Keep in mind, this is the last week of the month. We've got FOMC this week, so we have to wait until FOMC to see a breakout either to the upside or downside to show us direction for the next week, right? So just have to be patient uh, this week. Don't try to force trades. Use this time to learn, um, to refine your plan, to backtest, um, and learn how to uh, draw your zones correctly. Use this time for that. So if you do have a couple of hours that you spend on the charts every day, then instead of rushing into trades for those 2 hours, use those 2 hours to educate yourself. There's a lot of content on my channel. Uh, I follow the same plan in every video. So you can pick any 10 videos and look at the way the analysis is done, look at how the zones are drawn, look at how I identify supply demand zones, how I identify high liquidity zones, how I identify high liquidity candles, how I talk about liquidity areas, 5 key areas of liquidity that I look for price to grab liquidity at on a price chart. Or you can use that information, and also you can have a particular entry method that you're comfortable with. It doesn't have to be the method I use. I use a M15 fib model to enter and to take profit at. It doesn't have to be that for you. It can be anything that you're comfortable with, right? But in terms of zones, if you feel this information useful, then you can use this week to practice drawing those zones. Yeah, so we are still pushing down. We're pushing down very slowly. We are also creating a new low in the NY session, right? Okay, let's very quickly, before I end the stream, let's very quickly look at what price has done today. So that was the open of the weekly candle, open of the daily candle right here. Let's just zoom in a little bit. Okay, so that was the open. That's where the daily candle opened. Also the weekly candle opened right there, 276940, right around 276940. Price came down, went up, created a high. So that would be the Asian high. Let's have that there. 263. And then here came in 15. This would be the Asian low. So this would be the London low. Yeah. This would be the London high right here. Okay. So in the Asian session, price moved 185 pips. So that was a very good Asian session. Usually it is on Mondays you get fairly decent Asian session moves because it's the beginning of the week. In the London session, we also moved 230 pips. So we've had a healthy Asian session and a healthy London session. So the New York session might be quiet. At least the NY Open, we might see volume coming after NYSE Open, right? So that's about an hour from now is the NY Stock Exchange Open. So volume might come after NYSE Open, right? The NY session, NY Open might be quiet because we've had about 180 pips, 185 pips in the Asian session. Price move about 180 pips and about 230 pips in the London session. That's price has moved quite a bit, but it's moved down and it's moved up. So you can see that price is ranging, right? Basically, price moved from up. It opened here, pushed up, created the high, pulled back all the way down, and then went all the way back and 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 filled that candle basically, right to the top there, and rejected the Asian high, closed below, and is heading back to the Asian low. So we should come here. We should be coming to uh, 2754. We should be heading towards 2754, which is about 30 pips away. We should be heading towards that, right? Because we've rejected the Asian high, we should come back to the Asian low. And then if we close below that, we might head to the London low. And now you want to see a rejection. If you reject the London low, then this might be the daily candle low and price might continue to push up after that. Okay, that's in terms of how you kind of formulate a story of what price could do by looking at what price has done for the day or during the past few sessions. You can kind of have an idea of what price might do uh, in the current session and in the session to come. Okay, so again, we created a high, the Asian low. We've come back in the pre-NY session right here, tried to go above the Asian high, couldn't do that. Closed above the London high, but closed back below the London high. So this would have been, if you, for those who are trading the pre-NY session, this would have been a perfect candle confirmation because this is a rejection trying to get back above the Asian high, but failed to do so. This is a failure, but it closed above the London high, but then closed back below, right? Some traders call this a fake out. You can call it whatever you like, but basically that's what happened in terms of explaining. This is what happened. So this would have been a perfect confirmation. Once we close below the London high, we should be heading towards. So this would have, for those who are trading the pre-NY session, uh, unfortunately, price didn't pull back all the way to the middle of this candle to take a trade, but still, this would have been a great trade to take on a very little pullback coming down here. We should be heading down to the Asian low, which is about a 120 pip move down, right? And you could have placed your stop loss above that M30 candle high. There's an M30 candle here, just above that high, right? So we should head to the Asian low, which is 2754. We should be heading there. We've got about 46, 50, but almost about 50 pips left. Should come there. Okay. All right. So uh, that's the end of the stream. I've done the prep work or the analysis, whatever you want to call it. This is what I do. We've done this based off the 4-hour time frame. We've refined some of the zones based off, I think, the hour, 1-hour time frame. I don't think so. I think today it was based off only the 4-hour time frame. Yeah, just based off the 4-hour time frame. Sometimes I refine the zone if it's not clear on the 4-hour time frame. I look at the 1-hour time frame. I go down a time frame, and I refine the zones. But today it was very clear on the 4-hour time frame. Then the next thing that we did is we identified which of these zones are high liquidity zones. So out of the zones that the new ones that we drew, I identified which of them are high liquidity zones and which are not. And then the third thing we did was identify a high liquidity candle inside these zones, that where price could turn. Now you can see that high liquidity candle that we identified here, price has perfectly tapped it and is pushing down, and it is heading towards the Asian low, right? That's where it's coming to. So if you have a close below the Asian low, then we might be heading towards 2750 or even the London low. So again, for those who are looking to take trades today, wait for M30 support to form either at the high liquidity candle or at 2750, or if price gets through this high liquidity candle, it's coming down to this candle. So wait for M30 support to form here to take a trade going back up. And if you want to take sells, again, wait for price to come back up. So we got about an hour, 1 hour 22 minutes for the 4-hour candle to close. So within the next 1 hour 22 minutes, if price comes back up here, then wait for M30 resistance to form. And the reason I say within 1 hour 22 minutes is because once the 4-hour candle closes, we don't know how this candle is going to close. It's a long time for this candle to close. Once this candle closes, you will have to redraw or readjust. Don't want to say redraw, but you'll have to readjust your zones. These zones that we just drew today, prior to the NY open, you'll have to readjust them based off this candle. Once this candle closes, we don't know where this candle is going to close. It's going to close down here. Is it going to go all the way up, turn bullish, and close up here? So you'll have to readjust the zones. You might have to readjust them. That's why I'm not saying redraw. You might have to readjust them once this current 4-hour candle closes, right? Depending on where it closes. If it closes somewhere here, right in the middle of these two zones, you don't need to do anything, because then these zones are still valid. Price hasn't broken above the zone or hasn't broken below this zone. So if it closes somewhere inside this 175 pip range, then you're fine. These zones are fine the way they are, right? But if the price goes all the way up and closes up here outside the zone, you might have to redraw the zones. Okay. All right. Um, I hope uh, this hour has been helpful. Okay, has been informative. So for those who are waiting to take trades, I've given out trade ideas. We're going to come back tomorrow and see which of those trade ideas played out. Did the buys? I gave 2 ideas: buy set a buy trade idea and a sell trade idea. Now remember again, stop loss for your buys would be, the safer stop loss is under the liquidity candle low. If it's in here under this candle low, if it's in here, then under this candle low, right? This candle right here, this liquidity candle right here, okay? The more aggressive stop loss is under the M30 candle low that created support, right? Under that low, the more aggressive stop loss. And the same goes for sells. If price comes here in the next 1 hour 20 minutes, stop loss, safer stop loss is above this candle high here, right? Which is 2777.9. So you can say 2778, right? Stop loss above 2778 to take a trade down. We have come and touched the liquidity candle. So that's what we were anticipating. When price was here, I said that price should drop, and it's dropped. It's dropped there, right? We've dropped to the liquidity candle. We are coming to the Asian low, which is a 4-5 pips away. Yeah, it's about seven pips away. Okay, so we're getting to the Asian low. So now we got to patiently wait to see what price does in this area. Okay, all right. So I'll be back tomorrow, 7:30 a.m. EST. Again, the next few sessions, the next 4 sessions are going to be about an hour. I'm not going to be here for too long because I'm personally waiting for Feb. I want to see um, what I want to see market structure, right? This market structure is there's structure only on the lower time frames. There isn't structure on the higher time frames. On the daily and the 4 hour, there is not much structure. So I want to see daily and 4 hour structure, proper structure form. So when I mean structure, this is what I mean. Let me just show you what I mean by structure. This is clean, this is structure going up, right? On the daily time frame, you can see a drop, base, a rally. You can see demand levels forming, price going up, right? I want to see that kind of structure form, either for price going up or price coming down, so that I can confidently start looking for trades. And the same thing I want to see on the 4 hour as well. So when you look at the 4 hour of price, coming down, you can see proper structure form: a rally, base, drop, base, drop, base, drop. And when price comes to those levels, you can see reactions, right? Trades that we can take at those zones, right? Here we can take trades, here we can take trades here. That's what I mean by structure. Right now, we don't really have that kind of structure on the daily time frame and on the 4 hour time frame, because we've already tapped the 4 hour zone, we've gone deep into it, and we're just dropping from there. So I want to see some sort of structure form on the daily and the 4 hour, to be able to look for trades, right? I think we're just ranging right now. Personally, I just think we're ranging. um, and we might range, as I said, we might just range within this. We might just range between 2750 and 2787. We might just reject and go back up. So that's fine. There are trades to be taken in those ranges. It's absolutely fine. You can take those trades. But I want to wait for Feb. I want to see how the dollar performs in Feb. Because I think in Feb we're going to have a lot more structure on the US dollar, on the Dixie, against all the other major currencies, and also that'll also affect gold as well, right? So all right, so enough said. See you guys tomorrow, 7:30 a.m. EST. All right, take care.